Welcome to Saving the Investor with certified financial planner, investment advisor, and insurance professional Alfie, president of Advantage Retirement Group.
Good morning, Southwest Florida. You're listening to Saving the Investor radio show. I am Alfie, Southwest Florida certified financial planner professional, here with Pastor John Antonucci, and we are here to talk about the market of last week, and we're here to talk about the future. So stay tuned and welcome to the show.
Yeah, good morning, Southwest Florida, and good morning, investors. You know, we got a compelling show for you today featuring highlights from a recent client event Alfie hosted with Tom Siomides, chief market economist at AE Wealth Management. You know, together they unpack the major forces shaping today's investment landscape, from national debt and interest rates to shifting retirement policies and what that could mean for your future. It was an insightful and forward-looking conversation designed to bring clarity and confidence for those planning for the years ahead. Listen, if you're retired or you're 5 to 10 years from retirement, this is your moment to lean in. Alfie is going to share some key takeaways and some strategies to turn your uncertainty into opportunity. And before we dive into that, we also want to make you available to Alfie's offer this week. His book that just came out, Making Waves in Retirement, is backed by popular demand. It's filled with real-life stories, proven strategies, and powerful insights to help you retire with clarity and purpose. Listen, pick up the book. It's free. It's for you. It's complimentary. Call the operator. Ask for to text the word book to 239-747-1077. Claim your free copy while supplies last. Call the operator or text the word book to 239-747-1077. And Alfie, tariffs, we haven't really gotten any deals hammered out yet. The market's up one day, down the next, a little unstable. But we're moving in the right direction, don't you think?
I think so. With China, it seems like they're trying to get some type of deal going. President Trump said it's some communications going back and forth. We're going to have like 2 or 3 weeks. Looks like a deal of some sort will be cut. I think any type of deal with China will be good because they had everything. We had nothing. So anything that we get from that will be more positive than what it was. So that's good news. The market's liking that there are communications back and forth, and he's not, being so harsh on them publicly. So hopefully China and U.S. will come to the tables on that. But like you said, we do need a deal, and that's going to be huge. I think if we get a deal going, then people will see, hey, we got Japan, India. I think India could be one of the first ones. India and Italy.
Yeah.
Right. They were talking. So we just need an Inca deal. And then once we do that, I think you're going to see some stability in the market. You are starting to see a little bit stability in the market. We had one bad day in the market last week when President Trump was talking about firing Jerome Powell and, just really harsh on him. And look, should he be cutting interest rates? I think we need it cut because home, we're talking about interest rates right now with home sales are down again because people can't afford the mortgages. They got to get those rates down. So, I think the rate fell to 6.6. That was, it's not bad, but it's not, you got to remember back in the 70s, John, people were paying 14-15% for a mortgage.
How easy do we forget?
Yeah. So the rates are bad, but I was talking to my good friend, the Tom Siomides, and he was saying that this might be the new norm, where you're going to have that maybe a 5.5% mortgage, but going back to 3%, he said those days are pretty much gone, he thinks.
Really?
Yeah. I mean, that was free money back then. So we'll see. But he doesn't think it's going to get real low on that. But we did have some jobless claims that came out. This is our market update. And they were pretty stable. There was 6,000 that rose of new claims. And so it brought it up to 222,000 in the week, ended April 24th. And they were anticipating, economists from Wall Street was anticipating about a 5,000 increase. So it did increase 6,000. So it was in line, not too bad. Markets didn't react too negative about it. But again, on 30-year fixed rate mortgage rates shot up nearly 30 basis points. So it did go up to 6.6. So it's a little bit, you know, refinance activities fell about 20% since last week. So people aren't refinancing yet.
No, not if you got a 2% or 2.5%.
No, I guess they're trying to refinance the 7-8% mortgages that they were about a year ago.
Yeah.
When inflation was real high.
Right.
So we'll see. So there's a lot of activity going on. The markets, like I said, they did have a nice little rebound. We had 3 days that had some good returns, but the markets are still down. Markets don't like uncertainty, and we do have uncertainty. We have uncertainty with the tariffs, and that's the number one thing. And inflation, like you were talking about, John, with the beef. It's
Yeah, beef is up there.
beef is high, and gas is down, eggs are down, but there's still some things that are high. I go out, we go out to eat all the time, and it's just
It's 100 plus ahead, easy.
it's very expensive anymore.
Yeah.
And I don't see how, if you're on a fixed income, how you're going out to eat. You're just probably doing it twice a month.
Yeah.
You're not doing it like you were doing it, I would assume.
Yeah, it's true. And, the tariffs, when we talk about the tariffs, when you talk about interest rates, looking at cars, I mean, I don't know if there's an impact on vehicles yet. Basically, it says cars and trucks sales rose by 2.3%. The interest rates are up. The tariff is going to bring the price of the car up. But people are they buying cars that are already here, possibly, that have been in inventory?
Well, they're buying ahead now. They bought last month. They had one of the biggest increase in cars, 5%. That was huge last month because they were buying ahead of the tariffs before they go in. Now, President Trump was talking about maybe eliminating the tariffs on cars right now. So that will be, again, that's gonna, we have good friends that have some car business, and they're gonna love that because they said it's hard enough to sell cars right now with the prices the way they are, and then to add that on there, it's going to be nearly impossible. So, these tariffs are going to. We do need to have some type of tariff change because the U.S. has been getting ripped off for so long. So some change has to come into play, where we can send our stuff over there at a less paying stuff going over there than and then not paying as much for stuff coming over here. So if we can do that, if we can make some type of reciprocal or maybe not quite reciprocal, but better than what it was, that's going to be more money coming in the coffer, and that's going to help with passing that one big tax bill that they're trying to pass.
Right.
And that's because that excess money with the tariffs is going to help offset what Congress is going to look at, and Senate's going to look at, to say, hey, listen, we can't add money to the debt. We have to have it balanced. So if that happens, the tariffs are going to be a big part of that.
Yeah. Well, listen, if you're currently retired, or maybe you're 5 to 10 years from retirement, now would be the time to sit down with Alfie in Fort Myers or Naples, so that you can have a strategy, even if you're years away from retirement, that can cause you to really focus on what your goals, your dreams, your visions are. Alfie has created what's called a retirement simulator process that is a deep dive into your current portfolio and the strategy that you're on. Maybe you're dollar cost averaging, maybe you're at work at a company and you're putting money in that way. But this deep dive will really expose your portfolio to show you really what's going on. If there's hidden fees there that could be eating up your returns, if you're allocated properly, diversified correctly, making sure that you're not taking undue risk for the amount of return that you're getting. And actually, he'll put his portfolio and his plan that's tailor-made specifically for you side by side with your current portfolio that you have. And you're going to see on a big screen exactly how his will perform over the next 5 years, or the previous 5 years. You're going to see, going forward and going back, so that you have a strategy that can get you to and through retirement. Listen, he can only handle 9 people. You need to be one of the first 9 callers right now. Don't hesitate. Don't wait to the end of the broadcast. Pick up your smart device right now. Give Alfie Townsend a call, or better yet, just text the word VISIT, VISIT, to 239-747-1077. Again, you might be about 5 to 10 years from retirement. You might be saying, well, I'll give Alfie a call when I retire. No, the time to call Alfie is right now. Pick up the phone, call the operator, visit with him in Fort Myers or Naples. Either text the word VISIT, VISIT, to 239-747-1077, or tell the operator, I want to sit down with Alfie and have a complimentary review and plan a strategy that will get you to and through retirement. Stay tuned. We're going to be right back right after this break, so don't go away. Welcome back to Saving the Investor with certified financial planner professional Alfie Townsend. You know, Alfie has over 40 years experience as a CFP, but he's also a fiduciary, which means his responsibility is to you, the individual investor, not to the products or services that he offers here through the Advantage Retirement Group. And you may be retired already, or maybe you're 5 to 10 years from retirement. Listen, you need to pick up Alfie's toolkit right now. It's going to help transform your worries of retirement into confidence. Inside Alfie's complimentary toolkit, you're going to find a wide range of materials, such as, will your money last as long as you do? Are you paying too much in taxes in retirement? The Social Security decisions guide. Listen, if you're 5 to 10 years away, when's the most opportune time to take Social Security? Alfie has a strategy and a program, a computer program, that will tell you when is the opportune time to maximize your benefits. Don't hesitate. Pick up the phone right now, call the operator, or text the word KIT, KIT, to 239-747-1077. You want to position yourself for a retirement where you can understand where you're going and where you've been and how to get there. Alfie's going to help give you a strategy to do that. Pick up his retirement toolkit today. It's complimentary. 239-747-1077. That's 239-747-1077. 1077. And Alfie, we are about to go into the month of May. It's hard to believe we're ripping through this year and almost 6 months in. And
Crazy how fast. It was just here. We're just celebrating Christmas.
yeah. And we know Trump wants a rate cut. I mean, the signals from the Fed is really that he's not going to do too much, is he? So we shouldn't really even anticipate that.
No, Wall Street is looking for 3, possibly 4 for the year. So that would be pretty sweet if we could have that. But right now, I don't think Jerome Powell is in any, he wants to make sure inflation is not coming back up, going back up, but coming back, going back down even more than it is. So I think he's waiting for signals on that. And then he's looking at job numbers to make sure that they're not increasing, that unemployment claims are going up and up. So that's where the Fed will come in and say, okay, listen, we got to lower rates. We have to lower these rates to keep, get people back to work and spend money again. You don't want them spending money too fast. If he starts to lower these rates and then we have high inflation and they start buying homes and buying, then you're going to see inflation really tick up. So he's in a spot that he doesn't want to do too much, but he doesn't want to get behind the 8 ball like President Trump says he always is behind the 8 ball.
Yeah, well, we're coming up to 100 days that he's been in office. And I mean, you have all of these investments, NVIDIA, Apple going to invest here. It's going to take them about a year to build these plants, but then they're going to have a need for employees here, aren't they?
Yeah, what you're seeing right now is the first, he was left in such a mess. It really was. I mean, when you have 20 million people come across the border and you don't know where they are and who they are, that's a mess. And now you have judges trying to stop them from sending, people back to their homeland. It's just crazy what he's going through.
Yeah.
It's the same thing as what it was. They were talking about Russia back his first term. Now they're talking about courts, judges to stop all this happening. So he's always dealing with more than other presidents always dealt with, because they're always going to give him a hard time because they don't like him. And you see what's happening in Maryland right now with the MS-13 guy that's in jail, and the Congress and Senate are more care about him more than they care about the ones that illegals killed people in Maryland. State of Maryland didn't even go to the funeral, didn't even make a call.
Never went to Gaza, to ask for our American hostages.
Yeah,
nothing.
This is just absolutely, and that's why the numbers are going way down for the Democrats. They're at the lowest point, and if that's what they want to play on, that's great, because we could use more seats in the House and Senate. Usually you lose them at midterm, and we might be getting them midterm, and that would be a blessing, because we'd be able to get some things passed. And we got to get that one big tax bill passed, because If it doesn't get passed, then we'll never have opportunity, probably again, to pass that, because if we don't get that passed, I think the voting, um, people that voted for Trump are going to be so disgusted with the Republicans that they're not going to come out at midterm. So things have to start to happen. But let's talk a little bit again about, we do have durable good orders. You have they were up because of the fact that you had new car sales and orders in trucks rose 2.3% in March after a 5.1% increase in February. And this was really to stay ahead of the tariffs. But where you're going to see a problem is really probably the next quarter, because you're going to see these tariffs. They're looking ahead. It looks like the uncertainty with these tariffs, if we don't get something taken care of, they're going to show up in the second quarter. So we have to really, that could really drive the economy down if we don't, because all the buying was done already because of tariffs. So if uncertainty, you got to get these tariff is, and I think Trump and his team is really trying to get some deals done.
Yeah, I mean,
And it has to.
I mean, China can't hold down on this.
No, China is hurting.
Goods, so it's something that definitely has to happen, and it's something that we just got to watch for, and I think the markets will respond accordingly, like you said. But when the market feels calm, it's easy to keep your emotions in check. But when things get volatile, even seasoned investors can get the yips. And that's when costly mistakes happen. The truth is volatility isn't just risk, it's also an opportunity. And that's why it's a smart time to schedule a complimentary review of your financial plan with trusted financial planner, CFP Alfie Townsend. He'll help you see if your current strategy is sound or if it can be made even better. All you have to do is text the word VISIT, VISIT, to 239-747-1077, or call the operator, tell them I want to visit with Alfie in Fort Myers or Naples. There's no pressure, no obligation, just a chance to get clarity and confidence in your financial future. Call or text the word VISIT, 239-747-1077. And Alfie, for people that are on the sidelines, maybe sitting in a 3.5% CD or a money market that's really making nothing, I mean, you have opportunities right now. And if they get back into the market before these deals are made, they're going to be probably in a good position where it's going to ratchet up pretty quick, isn't it?
Yeah, this is a time, if you really haven't had your portfolio checked out, if you're concerned about, should I be in the market, should I not? Every day that you miss one of these big upticks like it was last week, you're missing 3 and 4%. You could have missed 7-8% growth just last week because you were sitting on the sideline. So if you're sitting on the sideline, there are items, there are products that we have that can really benefit the uptick of the S&P between now and the rest of the year, about 16%. So you can have 16% of the S&P uptick, but it would protect you on the downside 25%. If the market goes down 25%, which most likely is not going to happen, is most likely going to be going up. But if it does go down, you have some protection there. Why do you want to sit on the sideline when you have things like even our structured notes give you a 30% downside protection? We can get you right at 9% if you need income. Think about it on a portfolio. The rule of thumb is 4%. You don't want to take out more than 4%. But these structured notes are giving you 9% right now, right at 9%, 8.75 to a little over 9. So this is what you want to do. Take income from that and then let your money sit there and grow. We do it different here at the Advantage Retirement Group. We're going to look at your whole plan holistically and then put you in things that we have income taken care of. We're going to have growth taken care of. We're going to look at taxes. Should we do Roth IRAs? Is your advisor talking anything about a Roth conversion? If during these times of low volatility, when the markets are down, it's a great time to think about maybe a Roth conversion. We have the software to see if it's for you. So, don't just sit on the sideline and say, I'm going to wait, because you're waiting and then you're missing opportunity. There's opportunity with a volatile market. Let us show you what we do here at the Advantage Retirement Group.
Yeah, you want to sit down with Alfie in Fort Myers or Naples. He's a certified financial planner professional, and he's a fiduciary, which means his responsibility is to you, not to any of the products or services that he does offer through the Advantage Retirement Group. And this is the time to do it. You may not have another opportunity like this again. Once these tariff deals are ironed out and they're made, the markets are going to feel a lot more stable. And even if they don't, he has products and services that he's offering you that are 8 to 9% that you could take advantage of. Why sit on the sidelines? Find out what he has. He has proprietary products that really will benefit you. Alfie is going to add value not only to your portfolio, is going to add value to your life. Because he doesn't market time, track record invest, or stock pick. He puts together a program and a plan that will get you to and through retirement. Listen, if you're about 5 to 10 years out, don't hesitate. Call the operator right now. Tell them I want to visit with Alfie in Fort Myers or Naples, or text the word visit, VISIT, to 239-747-1077. Whether you are retired or you're within the window of 5 to 10 years of retirement, you owe it to yourself to sit down with Alfie now and get a strategy. Be one of the first 9 callers so that we can get you in this week. 239-747-1077. You also can visit Alfie on the web, savingtheinvestor.com. Again, his website, savingtheinvestor.com, has a wealth of information about Alfie, his company, and all the services that he offers here through the Advantage Retirement Group. Stay tuned. We're going to be right back right after this break, so don't go away.
Welcome back to Saving the Investor. This is Alfie Townsend, Southwest Florida certified financial planner professional, here with Pastor John Antonucci. And we just had a good first part of the show talking about the market in review, what happened this past week. And lots are happening. You got the tariffs, you have jobless claims, you have interest rates. Are they going up? Are they going down? Jerome Powell, is he going to get fired? Is he going to keep his job? I think he's going to keep his job. So that's markets like that last week when President Trump was asked. No, he's not there to get fired. And this is one thing I want to say is Bassett is like I think his main guru that he
good
yeah
strategist.
Yes, and I've been told by big business owners that I wish Trump would listen to his people more. He doesn't listen, but this proves that he listened, because this is something that he said, listen, we got this, we have to get this thing done, and this is important,
right?
And you can't keep bashing China, because if you keep bashing China, they're not going to come to the table at all. So, his tone has changed, and you can see it. The tone has changed and the markets have gone up. And then he said the main thing he was talking about is you can't really fire Jerome Powell.
Right.
He says if you fire Jerome Powell, it's going to be the markets are not going to like that, number one, and it's going to be in courts. It's going to be litigation after litigation, and it's not going to be good. So then you saw him ease off on that. So these are a couple things that he's eased off on. I think I heard.
Didn't he appoint Powell? Wasn't he?
He did. He appointed Powell, and then I did hear on Clay and Buck, and they were talking on the show last week about that there was big rumblings about Elon Musk and Bassett just having chest to chest fights.
Wow.
In the White House. I mean, and then all of a sudden Elon Musk says, "Hey, I'm out."
Yeah.
And because like they were saying, it's he's used to getting things done fast.
Right.
He buys a business, he fires people, and he gets things done, and he gets it profitable right away. Government doesn't work that way. It's just slow. It's a lot of red tape and he probably is just sick. His net worth. That's why I told our group of clients that came to our event with Tom Ciamati's. We're going to talk a little bit about that real soon. But I told them, don't you want to know with Doge? Don't you want to know the waste and do something about it? This is your money that they're wasting.
Right.
I mean, who would be opposed to that? Who would be opposed of digging deep with the government, finding out this wasted money, where it's going and why it's going there, and we can eliminate it and save a lot of money for our taxpayers? Why wouldn't you want to know that? And Tom was saying the people that don't want to know that is the people that are fighting it are the ones that are getting it, the ones that are benefiting from it.
Yeah.
They don't care about you.
No.
They're Washington. They don't care about you. They care about their pocketbook and act like it's for you. It's a bunch of, yeah. So, but again, welcome to the show. I'm fired up today, this Saturday morning. So I hope you're fired up too. we have a lot to talk about.
Yeah, no doubt about it. And, one of the things that Tom pointed out, which is really, the elephant in the room that nobody wants to really address over these past years that we've been alive, and that is that $36 trillion national debt as the biggest risk. What was his takeaway on that?
Yeah, well, we have a big debt, as he was saying. It's something that has grown and grown, and we haven't really done anything about it. And one of the things he pointed out is the lack of really, we have to reform some of our major expenses, which is Medicare and Social Security. But politicians don't like to touch those.
Right.
But that's what has to be touched. Not saying that we're going to take their benefits, but do a deep dive in there and see what is wasted in there and see how we can save. We could find probably $1 trillion very easy out of that. Very easy out of that. So we have to do that. Like Tom was saying, we spent trillions on just waste. And that just adds to the debt. So we have to look at that. We have to look at these programs that are when you look at Social Security, and you start talking about Social Security and Medicare, the Democrats are saying they want to take your benefits. They want to cancel. They don't want, you're not going to get your Social Security anymore. And then the media runs with it. And then even though it's not true, the people think it's true, and then it's not good. That's why they don't want to mess with it. But they have to have good PR, and they have to have a good plan and show why they're going to be messing with it, and that your benefits are going to be protected for the long run.
Yeah.
Not just now.
On in other countries. We could fund some of our own people.
Mm-hmm. So so that's some of the things that we talked about. We're going to talk about there was some planning, what a lot of people, like what Warren Buffett says, trying to time the market. It's not timing the market, it's time in the market.
Right.
It's not about, like the ones that are sitting on the sideline. He was saying lost all these gains that have came up last week and the week before. There were some large gains in there. So if you're trying to take your account out or wait to put your money back in, all it's going to take is one President Trump to say, we got a deal. And you're going to see, remember how big the market went up the one biggest day ever?
Yeah.
It's going to probably be that. It's going to be something like that, or, close to it.
Yeah.
It's going to be something big. And so the economy is going to get good. We get these tariffs taken care of, and all these companies that are, like you said, John, that are coming back here, that wants to build factories, that wants to build here, it's going to create jobs. So things are going to get better. You just have to have a little patience. And I remember a long time ago, this guy was giving a speech. He says, people don't have patience.
No.
They just don't have patience. It's like even how you had to boil water in the old days. You had to boil water. Now what you do is you put it in the microwave for about 35 seconds, and you're tapping your feet, waiting. You're tapping your foot, waiting to get. Come on, hurry up, hurry up, hurry up. We just don't have patience, and I don't either. I don't.
You want your coffee fast.
I want it fast too. Yeah. So, but we have to learn that you have to go through this to get to the better.
Yeah. Yeah. You have to have some longer vision, and that's really what, addressing those that are 5 to 10 years from retirement. A lot of people are waiting till they're retired to start doing something. They really need to have foresight, with insight that can come from somebody like you that has over 40 years experience as a CFP. I mean, for those 5 to 10 years from retirement, what was his takeaway there?
Yeah, well, 5 to 10 years, what you have to do, you have to make sure you have a plan in place. And when you stop working, if you have 5 years, you got to save money. You got to save money. And what I always say is you want everything paid off. As much as you want your home paid off, you want to work on making sure your credit card bills are paid off. And, because if you have less debt, and that means that much money you don't have to pay for your debt.
More cash flow, right?
You have more cash flow you get to keep. It's a lot easier to really plan when you have that. And you have to have an income strategy. You know, how are you going to take that income? Is it going to come from guarantee accounts, or is it going to come from things that give you more than that typical 4%? And that's what we talk about. We have the accounts that give you the 8, the 12, and even the 15% for income. So this is what you're looking at. You have to have income planning when it comes to your retirement, and especially if you're 5 years out. I like to say, hey, get everything paid off, save money, put money in Roth 401ks, versus your regular 401ks. And that way, when you take money out, you need less money because it's tax free versus having to pay that big tax bill every
and you
time.
talk about people that are listening right now that are within 5 to 10 years of retirement. You talk about it that they're in the retirement red zone, that they're close to the goal line, and they have to make decisions that's going to get them not only into the red zone, into the goal line, but through it.
Yeah, because if you especially have money, a lot of people's money are sitting in their 401ks. If you have a 401k and you're still working and you're over 59 and a half, majority of the firms allow you to take money out of there and roll it into your own IRA. What that does for you, it creates a whole new investment vehicles that you have unlimited investments that you can invest in now through us versus what the 401k offers. So that is so important. If you have an old 401k and you just left it at work and you're retired, you need to take that 401k, roll it into your IRA over here with us, and let us show you all the things that they don't have but 10% of what we have, if that.
Yeah.
They just have funds, and a lot of them duplicate each other, so they don't have even as much as you think they have. So old 401ks, if you're still working, we can help you out, or 401ks that you just left behind and sell at your old firm. You need to do something with that.
And we haven't talked about this in a while, but those that are, county employees, teachers, law enforcement, they have the drop program. They can actually make decisions now based on what's going to be coming up with that.
Yeah, you got the drop program. You have the investment side of, some people took the drop, some people did the investment. So yeah, we help a lot of the the Lee County and Collier County police officers and firefighters. So these are things that we look at all the time.
Yeah, this is the time to make a decision and make a move. If you're sitting back saying, you know what, I got 5 years, 7 years, 10 years, don't wait. Pick up the phone right now. Visit with Alfie Townsend. Let him take a look at what you have and make prudent decisions that will get you to and through retirement. If you're in the retirement red zone, which means you're 5 to 10 years out, or you're currently retired, give Alfie a call. Be one of the first 9 callers right now. Text the word VISIT to 239-747-1077, or tell the operator, I want to visit with Alfie Townsend in Fort Myers or Naples. It's complimentary. He'll take a look at what you have and make decisions and help you make choices that will be beneficial while you're in the red zone, so that when you get to the goal line of retirement, you're going to score big. Give him a call, 239-747-1077. Again, text the word VISIT to 239-747-1077. Stay tuned. We're going to be right back right after this break, so don't go away. Welcome back to Saving the Investor with certified financial planner Alfie Townsend. Alfie's talking about that one big bill that will keep taxes in check. But taxes are a ticking time bomb, no matter how you look at it. And it's something that you're going to have to deal with, even if you look at your portfolio and say, you know what, I've million, 2 million, 10 million, whatever it is. You really don't have that, because when you take it out, you're going to pay taxes. And you really need a plan that addresses uncertainties and instills confidence in your future. As a certified financial planner professional, Alfie has put together a program called the Tax Map that will help you achieve 3 key goals. Number 1, lower your tax bracket. Number 2, protect your money when taxes rise. And number 3, create a tax-free income. Listen, if you want this tax map, be one of the first 9 callers right now. Reach out to Alfie or text the word tax to 239-747-1077. Again, don't hesitate. Pick up the phone, call the operator, or text the word tax to 239-747-1077. Get a hold of Alfie's tax map so that you can be positioned positioned correctly when taxes do rise or when you have to take money out of your portfolio. We're talking about a visit that Alfie had with his clients and Tom Siamati's. One of the most eye-opening moments was when you and Tom said missing the 50 best trading days could destroy your returns. I mean, people have been in the market for 40, 50 years if they're retired, and you're saying that 50 days could actually destroy their returns. Is that
crazy? Yeah, it's if you miss your returns go from just leaving it in the market, you get like this goes back. You're getting over the last 50 year or well, no, from 1988 to 2022, you miss the best days in the market. You're at 20% return versus if you miss the best 50 days, it goes from 20%, John, to like
2.8, yeah.
2.8, 3%. It's crazy. So if you miss, even if you missed, don't have my glasses on right now, Jen, you're gonna have to help me out. But let's just say you had,
It's got a small type there.
it is multi. You can't see it. Let me get my flashlight. No, I get my flashlight. Because these are numbers that you got to.
Oh, if you're watching,
Yeah, you got to see.
we got our flashlight on.
Oh my gosh. So you missed the 10 worst days of the trading. It goes from 20% down to 12%. So what it's saying is you want to be in the market, like I said earlier. Buffett said it's time in the market. It's not timing the market. Timing the market is just something that just doesn't work.
And the longer you're in, the better you're going to do, aren't you?
The longer you're in, it takes your volatility away. Because if you start with $100,000, let's say, and it grows to $1 million down the road, if that million goes down to 800,000, you're still so far up. You're not losing your money. The longer you're in the market, the longer you have time to handle volatility. So that's what it's all about. And the other thing, so what we do here at the Advanced Retirement Group, we want to make sure that our clients understand how the markets work, okay? How markets work, how your income plan works, why we're doing strategies that we're doing, legacy play. We're doing all that for you, looking at taxes, Roth conversions, and all that good stuff. But the one thing we do is we bring coaches in. We bring, like Tom Siamati's. He's a CFA. He graduated from West Point. And so what he builds a portfolio. So he comes in and he'll speak to our clients. We had about 100 clients that came in. We bought them lunch, and he's talking and he's explaining, answering questions for them. We had time to talk about what questions you have, ask them, and we were answering them. And this is what makes what I told Tom is I said when the markets act up, we don't really get calls. People ask me all the time, man, you must be getting a lot of calls. I said, no, we don't, because our clients understand that it's time in the market, not timing the market. They understand that. They know that we have them in things that their income is not going to be affected because they're getting that 8, 9, 10% income coming in, and they're not worried about what the market does because it's not going to affect their income. So these are the things that we do. And like one thing he said that really resonated is that, the market, the S&P, the history of the S&P is really positive 76% of the time.
That's almost 8 out of 10.
Yeah. And he said, and then he said, and you're baseball, you're much, more familiar with baseball than I am. I'm more football, but Ted Williams had the highest batting average, right?
Right.
That's in the Hall of Fame.
Yeah.
Right. He's the highest, and it's what, 420, 450.
He could get a hit 4 out of 10 times, which is an ultra success. I mean,
yeah,
3 out of 10.
Yeah,
So,
the average is probably 3 out of 10. He got 4 out of 10.
Right.
But if you could be right almost 8 out of 10, that's
Yeah.
pretty good averages, and that's how you have to. And they got in the Hall of Fame. People with hitting 3 out of 10 gets in the Hall of Fame.
Definitely.
So when he said that, I said, that makes a lot of sense. If you just are consistent in the market and that you have good companies and we're rebalancing and we're looking at income, we're looking at different things, you're going to be just fine. and it's having that plan in place. So you might not have a plan in place. You might think you have a plan, but you know, things aren't hunky dory with your advisor. Maybe you outgrown your advisor. We talk about that all the time. It's worth to give us a call and let us do a comparison. David Antonucci, John's son, is a fantastic advisor here at the Advantage Retirement Group. Curtis and Garrett, what we'll do is we'll look at your accounts and just see what you're in. Number one, most people don't know what they're in. And then we'll look at your income plan. Show us what your plan is. A lot of people don't have a written income plan. We'll give you a written income plan. So we'll show you that. But we want to see what you have so we can analyze it for you. So when you come back to that second appointment, what you're doing is you're looking at what you have, what we found out for you. It's we dig down deep, and you're going to see what your fees are. If you own, long-term bonds, short-term bonds, if you own annuities, whatever you own, we're going to show you what you own and what your fees are in those things. And then we're going to get together and show you what we would do. Then we could do a side-by-side comparison. If we do that side-by-side comparison, we can go back 3 years, 5 years is all I like to go back. We can go back 20, but to be fair, it'd be 3 to 5 years. You want to go look back and see what we would do, how we would have done compared to what you would have done. That's what you want to see. And we put our fees in there and everything. We're not hiding anything. So it's worth to give us a call. That's called the Retirement Simulator. John will let you know how you can do that. But that's how you find out if you're going to make it to and through retirement.
Yeah, Alfie just gave you a plan, and if you don't have a plan, you plan to fail. He just outlined his retirement simulator process, which is a proprietary computer program that will be that deep dive into your current portfolio. Listen, if you're 5 to 10 years out of retirement, don't hesitate, don't wait. If you're currently retired, don't hesitate, don't wait. Pick up the phone right now. Be one of the first 9 callers to visit with Alfie in Fort Myers or Naples. All you have to do is call the operator, say, I want to take advantage of what Alfie just talked about, his retirement simulator process. You're dealing with a man that has 40 years experience as a certified financial planner professional. He's a fiduciary, which means his responsibility is to you, the individual investor, not to any of the products and services that he offers here through the Advantage Retirement Group. Pick up your phone right now before we go off the air. Text the word VISIT, VISIT, to 239-747-1077. You owe it to yourself to get a plan and a strategy to get you to and through retirement. Give Alfie a call today.
Thanks, John. Yeah, we talked a lot about really what the market did this week and this past week. And markets are very resilient. They're going to go up. They're going to go down. But if we knew what the returns were going to be in the market, we would not really want to be in the market, because that would be like being in a CD. If we knew we're going to get 4% in a CD, that's all you're going to get. So you don't care what the market does. But when you have the opportunity to make, hit some home runs, and you have opportunities to really beat inflation, that's what it's all about. You're in the market to beat inflation. And with a diversified portfolio, with an income plan, you're going to be able to do that. You're going to be able to have that income. You're going to be able to do the traveling. And we love to travel here at the Advantage Retirement Group. We have even a travel concierge for our clients. So these are things that we do for our clients that you're just not going to see elsewhere. It's I always say, give us an opportunity to show you what we do, and I think you're gonna like it. If you've never seen our TV show, it's on NBC2 right after Meet the Press. It comes on every Sunday at 11 o'clock, 11 to 11:30. And then you can, check us out on TV. And, of course, right here on 92.5, we've been on this station for so many years. And we have now Mike Opelka that's doing our, some endorsements for us. But what we also do is every Monday you want to listen to us at 7:37. And we give the really review of the week with the market. So I hope you can listen in. Until next week, be blessed.